if you're out there on the X streets or involved in crypto or macro at all, you've probably heard of Tyler Neville. Neville?
Neville. Yeah.
Neville for sure. It'd be so much cooler if it was like Neville.
They say Neville, you know. So
from what side? What side was that?
My Italian side.
Uh-huh. Hey, let me ask you, if you have an Italian side, what's the best cut of pasta?
Oh, I have no idea. I'm not that Italian. Yeah.
No. All right, fair enough. So I thought it would be fun, guys, to get Tyler on because, I mean, especially with the stuff that's been going on, we just see all sorts of random wild things in the world these days and nothing ever shocks us. Like I think back to like, if it was 2018 and they sent the Delta Force in to just jack what do they call it? Black bag a president. I think everything would have been like much more up in arms. And now all we do is make AI memes about it instantly.
Oh yeah. Yeah. Everyone's this is part of the short vol thesis, perfectly. Like remember when Russia moved in on Ukraine the first time, and it was like the VIX was up 30%, market was imploding, and now you just take out a leader of a country that has one of the largest oil reserves in history, and boom, market rises off that. So I don't know. That's just the world we live in now. Yeah,
I mean, it seems like more cracks in the seams. This whole fraud thing we could get into a little bit too, but like. All right, let's start with if you want to give them a 10-second who you are, and then give me like, hey, we just wrapped up 2025. We're moving into 2026. Give me your overall feel of like where we're at right now.
Yeah, it hasn't really changed much. So I trade equities and derivatives. I'm at Muddy Waters Capital. It's a activist short fund, but we have a gold long strategy. As well, so kind of funky
My
shop.
favorite, by the way. I work at a short shop, and our best performers are our two long things here. Like that's the way of the world.
Well, we have a lot of different strategies. It's kind of funny. Carson Block, famous short seller, runs it, but he's been doing this for years, and they've been very successful every year, even with the tape rising. And when the tide is rising, in fact, you get more nefarious behavior because people think they can get away with a lot more stuff. So, if you think about the Somali fraud stuff, if it's a recession, that's when everyone's like, pissed at where every dollar's going and they're paying attention to things. But when, there's constant money printing and fiscal largesse, there's a lot more fraud rampant. So, Carson's dubbed it the golden age of fraud. And, there is in a lack of a lot of short sellers now in the marketplace, it's a real opportunity to kind of exploit things that are going wrong.
But yeah, it seems like it's setting up for an amazing time to work there.
Honestly. Yeah, that's what I think. And it's there's a totally differentiated pitch. Like if you think about all the incentives for the 401k system and allocating capital through passive investment now, it's just, you're basically a robot or like a giant sausage factory that just spews out slop. And we're trying to actually do jujitsu against a lot of these things now, and some to the long side as well. So like we've thought about hedging. Like as an activist short seller, you have to think about hedging on the long side twice as much. Why does the market go up? What is the function of every dollar that comes in and goes elsewhere? So they've actually thought about that. Where a lot of beta neutral hedge funds that just, they pair their long with their short and they don't think about the market structure or the buyers and sellers in the market. They've actually gotten a lot more beaten up on this stuff, even though we're activist short sellers. So it's kind of differentiated product. And I like iconoclastic people that don't think normally and aren't afraid to kind of say crazy stuff, because that's really what investment should be, is actually seeing things that other people don't. But most people, the whole system has been set up to just become a herd mentality. Like, oh, this is how investment is. And for thousands of years, it's never what investment was. But we've basically created a Ponzi scheme. And therein lies, like I call it, why America. But now assets can't really drop because they're so tied into the benefits and promises of the baby boomer class. So that's sort of what I talk about a lot and rant on Twitter and our podcast on. So But the end result is the next generations are finally feeling it, and you can see all this stuff brewing in the next generation, the anger, the how badly they've been screwed over, and it's starting to come out in the politics now. So I don't know where you want to go with that.
Yeah, that's one thing I sent our mutual friend something, or I tweeted about it or something, is like, I watched I clipped it out and put it online because I thought it was so good, is we're seeing it in the culture before we're seeing it in the markets, right?
Yeah.
It's like they're showing it to you on a plate. They're like, do you not see what's happening? Like, we're giving you the chance to think about it via all of these things.
Yeah. Know? And if you're a baby boomer, you don't see it because you're actually conditioned. All the media, the media is the message. They're watching mainstream news. They have pensions. They actually have way less inflation. Inflation's a funny subject because like my mom's a great example. Just bring up. Sure. My dad was a teacher for 40 years. She's got a full pension, Social Security, 403B retirement plan. She only has expenses for one person. She's got a COLA adjustment on all of her stuff. So the cost of living gets ratcheted up on all her revenue. She's already had all the equity in her house appreciate. She's got no real, she's probably the benefit of inflation on all the assets that she owns. And, she doesn't have any expenses on children, on childcare, food prices really relative for family, all the things that we're paying for, which kind of is causing this, the K-shaped economy, right? So if you don't actually have access to assets or have built a big enough capital base, you're just getting chopped up. And you're seeing it in, the crazy personalities like Nick Fuentes. They're seeing, you can see the viewers of anybody who stews real resentment towards people and pockets of the economy. You can see it now, and the boomers are kind of ignorant towards it. Like they don't even get it because they're watching, mainstream news, which is just kind of a brainwashing mechanism. But the next generation kind of understands it. So I don't know. I think it's going to end poorly, but yeah, that's kind of where I'm at right now.
Yeah. So when I hear that, like the boomers, they're not even put into a predicament where they have to think about it. Everything just seems to kind of, work out in a way that doesn't force them to question anything. And then if we are underperforming or we are doing this, they kind of lean into that, like, well, giddy up, boys, just figure it out, right? Because like that's what we did, right? And I don't love that, but like that is such the case. Like if you go talk to your grandma or your mom or like it's just the case for all of us. It's the same shit. And so when you say like your mom, for instance, right?
Mm-hmm.
By the way, I've never heard of that like cost of living adjustment.
Yeah. The COLA, yeah, it's baked in a lot of pensions. So like, you make, if inflation CPI is at, 3.5, you get a 3.5% raise.
That's cool.
But
all I was going to say is that it seems like for somebody, like if she's like the representative of a lot of this cohort, the money is just like in these pure plays, like these pensions that are paying out, these 401ks that are paying out, the money they've saved, the houses that they don't owe money on anymore. Like the money's like trapped in this coffer, and they have never been forced to have to ask a tough question of whether or not they need to like ever move it or give it to they've never been forced into a position, yet we're forced into it from like birth, it seems. So how does that work?
Well, they had a lot of great benefits, and they did a lot of great things too. Don't get me wrong. Like they had a natural baby boom. They unlocked a whole bunch of surplus of labor in China, which allowed them to lower rates for 30 years. Right. So the cost of outsourcing your consumer goods came down, and they unlocked a lot of oil and a lot of those things that allowed them to lower rates and kind of goose the system. But the main difference for us, I think, is the pure amount of debt is way different. It's like it's bigger than World War II. Like, what is it, 40 trillion in debt? And and what debt really is just, it's a game where if I convince you to take out debt and you pay me with it, I can pay myself a bigger bonus now, and you have to bear the burden of that down the line. And so it's really just, that's what the boomers have done to us, but they don't really realize it. And so I'm not sitting here complaining. I'm more self aware. I think it's like a self-awareness talking about this, which is everyone out there is complaining. This is why it's happening. And here's how you can combat it, right? Like this is how you can get around getting screwed by the boomers. Is you have to be in a majorly productive industry. You have to go to like, I talk about space or AI or something that's growing or has like the backing of the federal fiscal impulse, because that's where they need to grow the pie. That's the parts of the pie that they want to grow so that the economy can keep growing, right? But if you're in boomer areas like housing, perfect example. There's there's stuff going on social media now. I think housing's topped. And if that used to be the perfect short volatility asset. You manufacture debt, you buy a house, that worked for 40 years. But now the next generation, like the boomers, are going to sell their houses now. And they're like, well, I can't get, $1.5 million on the house I bought for $100,000. So there's this major gap in generation between demand and supply in leveraged assets that were boomer assets, right? And so I think boomers are going to be, they'll probably jimmy the demand side and make, hand people money to like buy a house. And then they'll also make like capital gains tax free. And this is where I call it, the acronym factory is boomers will do everything to bail out asset prices that they own. And so they'll make tax loopholes, they'll do all these things so that boomers can retire and not, because they're not productive, right? Like they don't have an increasing wage anymore. So they need to figure out political ways to make themselves wealthier or, safer. So all these things are kind of colliding, and there's a lot of assets that I would be in, which I call our frontier assets, as long as there's no credit problems in the system. Now there's times where the credit problems do pop up. Like I think towards the end of last year, that was one of the hardest. Fourth quarter was really hard to invest in because you had a lot of private equity guys were feeling some crunches. There was some banking problems in regional banks. There was some subprime auto loans, credit card defaults. And I think the government just bailed them. I mean, the Fed just bailed them out. And that was largely just like we saw credit spreads widening all of a sudden. And there's pockets of those times that happens, but the government is always one step ahead now because they know the problems are so big, they can't let the plate stop spinning. Because if you really have another credit crisis somewhere in a part of the economy, it'll derail the whole thing, and you'll just have God knows what. They'd much rather have this K-shaped, Weimar-like economy.
Yeah, it's like the housing thing is another example of you saying they're going to convince you in a fashion to basically become the next debt holder, right? They want to like this gap that exists right now. I mean, I see it out here in San Diego, right? I live in, the area at all. Have you been out here?
Yeah.
Okay, so like I'm in Del Mar, which is like North County. So you have these old money places like Del Mar, Rancho Santa Fe, La Jolla, these things, right? Solana Beach. When I moved here, there was barely anything on the market. COVID moved, 2021, whatever, right? Slowly over these past years, they've been starting to plot out. All of a sudden you open Zillow, Redfin, all of a sudden there's a little bit more, right? Yeah. But the prices have always been astronomically priced. And I've done enough diligence now to be like, nah, come on, guys. Like you're being a little ridiculous. Yes. And now there's a lot, but the prices have not adjusted. So to your point, like it's this Wile E. Coyote moment where their prices are out there and available. But at a certain point, if the bid never hits, like that iceberg is going to have to drop. And there's a lot of orders behind that iceberg.
Totally. And you know what? I think that they're sitting on so much equity, they can just take their house off the market.
Yes.
If you think of, and I think there's this game of cat and mouse, but if I was a boomer right now, I'd be hitting bids because I would, in 5 or 10 years, like it's not like tomorrow our wages are going to go up 20%, 30%. And, maybe if AI it makes me 50 times more productive, who knows? But I don't think demographically there's so much supply of boomer real estate that's got to come to market, one by hook or by crook, and they're going to start hitting bids at some point, or the government's just going to, like, I think this capital gains thing where they say, oh, no capital gains for boomers, and then they're going to give a credit for if you're under 40 or something like that to buy a house. But there's gonna be so many political games here, because when something gets so centralized, at the end of centralization, it always ends in a political battle. And that's really, I think, at the end of what we're seeing. And political battles don't necessarily mean the market has to sell off. Parts of the market could do bad, but like in general, when we saw this in Germany and they were printing God knows how many, Deutschmarks, asset prices, that was the only way you could save yourself. So I just think you have to beware. I think the market's going to grind higher over 2026. GDP is okay. The government's cutting rates, inflation. They clearly know what levers they have to pull to lower rates. And they're doing all sorts of games on the yield curve and treasury issuance, et cetera. They're aware of the big icebergs. And that's the difference between now and 2008 is the problems are so big. They're always navigating them now. And it's always to the benefit of the boomers, because if they're all in power. Here's a great stat that I retweeted today. You'll love this one. So this is
do you want to share?
I'm terrible at sharing, but I'll just say it. The birth year of the winning candidate of the last 9 presidential elections in the US, 1946, 1946, 1946, 1946, 1961, 1961. I think that was Clinton, or actually maybe not. 1946, 1942, 1946. So literally, like, that's who ruled over us and they're not paying, they're in the different circles. They're not being like, oh, you have 3 kids and I was just looking, this sounds absolutely ludicrous, but I was looking at my childcare bill for one of my kids and it was like 25 grand a year after tax money. And so you're like, that's daycare. But like that daycare cost has gone up astronomically. Years. I have 3 kids. So like boomers don't think like that at all. Like they don't realize that's like a real cost. So I don't know.
Yeah, they had kids in the house and out on the street. I don't know that they were bringing them to these high-end daycares and getting them, meatless lunches and.
Well, generally, they just had one parent working too. That could price for all and all the salaries, et cetera. And like, it goes to the Mike Green point about like, you're considered kind of under the poverty line at 140,000 USD per year. Probably way higher in California was absolutely ludicrous. Like you'd walk out the door and it was just like, you're getting dinged on stuff. But anyway, so there's just a lot of generational imbalances that I think are going to come home to roost.
I think it's a good point that like the way I see things going forward is this rotational whirlwind of years of just like asset rotation. So it scares me to be, it has scared me to be just in an index passively for a while, but of course that has just continued to work, to your point. But I just see these like ebbs and flows and these like super outperformance here, underperformance here, because there's so much money out there, right? And we're so financialized with all these quick acting platforms that money can just like travel into these pockets just so fast. Even with the frontier stuff you've been talking about, the moves on these things are just astronomical too, with price discovery and who knows where they're gonna. Space. Of course that should be like a $5 trillion asset. It's space. It's big. Like how do you fucking know? Like it's. So yeah, go ahead.
That's so fascinating because there's also like because we're in I guess secular stagnation. There's not pockets of the public market that are really growthy.
Yeah.
And therein lies like you have these stupid ETFs that once you get into a growth ETF, it just takes things to such an extreme. And you push or meme ETFs now are like they cause like float issues with certain stocks. So it hoovers the float. And so you're dealing with a whole nother market structure that you never had to deal with before when it was actively managed. And that's why it's so hard for regular long short hedge funds is they're not thinking about the flow dynamic. They're probably starting to now, but it just doesn't.
It's getting more obvious, right? It's like becoming more and more prevalent.
And the other thing is like, the stifling of the bond market is really like when you keep volatility low in the bond market, meaning like you can't default on debt and you keep allowing zombie corporations to refinance and refinance and refinance. that causes short squeezes. And like, you always have as long as you have public market access, you have the ability to do so many things with your capital structure, right? Is high yield spreads are so low, you could be a dog shit company and tell a good story, and that causes a short squeeze. In fact, those are outperforming regular good companies. So, so like, and therein lies like the whole problem with the market structure is it turns into, I talked to this one guy who was a market structure expert, and he's like, he also writes an incredible Substack called Lewis Enterprises. And he talks about how no one wants to finance like a good 15 to 20% growing mom and pop value business anymore. And so what happens is you get like this barbell of, every 40 cents of a dollar goes to the FANG stocks. And then you get like this other barbell of the meme stocks, and good value stocks just kind of putts along, and they get no capital accumulation anymore. So it's a really, it's synonymous to how we live our life, as next generation is like, we're not going to make up our wealth when growing 5-6% a year. Our wages aren't going up, 10-20% a year. Our assets aren't going up 5-6% a year. So how do you get above that debt hurdle if you owe student loans, et cetera? You can only go out on the risk spectrum. But the problem is that like, it's so volatile. It's really hard to buoy that volatility in the growth industries and actually stay there for it. Like take a lot of these like Bitcoin miners turned AI infrastructure. They have like plus or minus 8% moves a day. It's like, it's stupid because everyone's YOLOing options. So we've really turned the market into a casino. And that's why, Polymarket comes out and everything's just a giant gamble instead of
just another wrapper on speculation.
Yeah. And who wins is fucking Jane Street and Citadel and all the options market makers, Susquehanna. And we've taken the incentive system from like a long term, because we know that the system long term is completely screwed. Like with the debt the way it is just like, you should just go buy a bunch of gold stocks and just close your eyes. That's why everyone loves like Bitcoin. Makes a lot of sense to me because of that very fact, is like that has to work, or gold has to work to get out of all these problems. So that's where my mind goes. How do you save yourself in a system that is like bound to screw you over?
Yeah. So I want to get to that after, but just on your point, you're referring to that Hunter guy.
Hunter.
Like
yeah.
Horfprop? I don't remember.
Hopcroft. He's fantastic. Yeah.
Dude was a little too right curve for me, but like it did change. Like I listened to that segment you read before you had him on. You read a piece of like one of his things, and that changed my mindset completely. I was like, oh, it totally makes sense. Is like the money doesn't go to the middle, it goes to the tails. And then because of that, you have heavier concentration. And then the money starts to get piled into these private companies because they don't want to go public. And then what do? They eventually IPO and dump it on us again.
Yeah.
Just fucking the rinse and repeat, And I'm like, all right, so now I'm thinking to myself, if you have geopolitical stress, it's going to be a battle of an election next time. You have a bunch of IPOs happen for a year. You have all of these AI companies maybe or maybe not fulfill the earnings of all their spend over time. And then what if, like, the big kicker to me is like, what if there's like a really massive jump in compute or energy efficiency or whatever, and like all of this stuff converges into a moment where like the coyote just falls, and no amount of government intervention, no acronym can save this, and then it causes this massive calamity, and we're still in the window where there's like 7 or 8 years left of boomers retiring and the big chunks of it, and they're forced to go call their bro and be like, hey, like we're down 35%. What do I do? And they're going to be like, well, whatever, don't make a decision.
That's for the long term.
Yeah, but what if it goes another, like, Mike Green, that stat he said, that I think you've mentioned this before, where like during COVID's worst moment when it was down like 32% or something like that across the board of TradFi stocks, only like 1.5 or 2% of redemptions were called in, right? Like out of passive flows. And he was like, what if it was 5%?
Yeah.
And
like,
I was like,
zero.
Christ.
Yeah.
You know, so
Well, I think that's my bigger issue is like, if that were to happen, the government would just print money to the cows come home, and it would suck for however long, a month or whatever, go through that. But I think Venezuela is like taking the big, at the end of the day, if we have access to oil and you don't have that big inflation spike, I think that really helps a lot of stuff. And that's probably, honestly, probably in those think tanks, what they're saying is like, if oil ever goes to $100 a barrel, we're screwed, right? Because then you have to raise rates, and you can't, juice the system anymore. So I don't know. I think we're just in a whole new world of monetary dilution and fiat losing, its purchasing power. And the sad part is, there's going to be a moment, we've already seen it, like gold and silver's going parabolic. People are losing faith. Why would you ever own a U.S. Treasury? I've been saying this for like 5 years now. When they were issuing high yield bonds at like negative rates or whatever the hell it was like, I was like, this does not compute in my head. Yet the entire 401k system is taking, baby boomer money and planting it in all these bonds that just sit there, life insurance money. It's doing all this stuff. So the only way out is up. And you just have to be prepared. If you trade when you trade well, be prepared when things get frothy. They're going to start jawboning about, taking the punch bowl away. And then, you get back in when that VIX inverts and the front month VIX goes up. That's when you start like kind of nibbling again on the buy side. So I think that's the name of the game is it sounds very simple, but it's a Ponzi scheme at this point. We all know it. More people are starting to get it. There's productive pockets of the economy that function normally like capitalistic, but then there's a whole section of the economy that is starting to be more state driven, and it's that I call it systematic communism is really what passive is that should not be a capital allocation the way you decide to allocate money on a entire national basis. Like that's horrible. Think about the horrible things that happen. We joke around at Muddy Waters here is like, you can have a complete fraud company and Vanguard, State Street, and BlackRock all own it. And you could come out and say, this company is causing cancer in children in millions. And it would fall maybe for like 20% for like maybe a day. And then BlackRock and Vanguard inflows would just bring it back up. And you're like, that's like that historically that should just go to zero, right? Like, you should have, but because of the market structure, it doesn't. And there's something really inherently wrong with our system when that happens. So I don't know how to solve it, but you have to really, I think our next generation, when the politicians aren't co-opted, will actually have to address these things. But maybe you get the hyperinflation before that. So, or maybe AI works and it's a productivity boom and we're all, we don't have to work anymore.
Yeah. Who knows? When you say that, it just like, I love anecdotes. And I know a lot of people who are like, quantity online nerds, they like, just give me the fucking data, like take your anecdotes and shove it. But I like the anecdote of like the guy down the street. Like, I think that is a real thing. And whenever I talk to people, it makes me realize, and I don't know that much, but I spend all my time talking to people like you, asking questions, digging deep, trying to learn more about it. If you're to ask the normal person first of all, where their money is, they don't have an answer. First of all, it's with a guy. They call him up once a year. It's with a guy. And then if you were to ask them, like, do you know what like a 10-year US bond is and what it does or why it exists?
Yeah.
Good luck, dude. And for them, for the ability to pass off the data to continue this game, it's great. Nobody asks the questions. So it'd be one thing if everybody knew where their money was, what it was doing, and why. Because then if everybody does it passively like that, it's like a different story. Because it's like a collective buy-in or something, right? To like, no, this is where we want our money to be. But if everybody knew all the shit it's like, where would money go? Where would it flow?
The prime example of that was like when they were buying like the Austrian 100-year bond, at I think it was like 0.3%. or something. Austria financed themselves for 100 years. And guess who bought that? BlackRock, Vanguard. And it was probably from my mother-in-law's,
Right. Yeah. Target
date fund. And you're like, now that bond's down 40%, but you don't even realize it because it was, 0.01, percent of your emerging bond market currency. But like, no rational person would ever buy that. Countries have fallen in like 30 years or less. Like 100 years is a long time. Anyway, the whole
go ahead.
The whole way the sausage is made, it had good intentions in the beginning. Was like, all right, we'll try and make this, and then it crossed some sort of Rubicon where it actually has made the market not a free market anymore. And I say the market is now a political utility. It's really, that's what it is. And you have to play sentiment. And to all the data people that saying it's like, you have to play sentiment more than anything nowadays, because like sentiment actually has been a better indicator than anything else. Like when, the best time to buy it was when sentiment was in the dumps last March during the tariffs. And, it hasn't even gotten super frothy just yet. The market's at all-time highs. So,
well, voices have a better channel of getting out there, right? You can hear the sentiment way more than you could ever hear it before. So kind of makes sense. On a quick note of like, it almost feels like they had good intentions, but somewhere along the lines they crossed. I just got it, Nextdoor, the app. Every parent has Nextdoor, right?
Yeah.
Literally like an hour ago, I get a notification, and I thought I had that notification off because I don't pay attention to it. But there's a sushi in San Diego is like really good, right? Yeah. Sushi is like sushi and Mexican. That's pretty much all we got. And there's a place that's famous around here called Sushi Oda. And it's in like a little strip mall next to a 7-Eleven. So like you could go get a taquito there, then go eat sushi. That's like really high end, right?
Yeah.
And it's a place that like was always busy, always whatever. Somebody posted on there a thing today that they went, and the guy that like started Sushi Oda, the guy, Mr. Oda or whatever, he passed away, and like he had, I don't know if it's direct family, but we'll call it people close to him take over, right? So these people went and they ordered pork belly as like an appetizer, and they got the pork belly and it wasn't pork belly. These are like sushi like connoisseurs, right? And they try to talk to the person. They're like, this isn't pork belly, and they're like, no, it's pork belly, and they're like, well, I'm sorry, but like, no, this isn't even actually pork belly. It's not like you gave me like a
spam.
And they're like, and he's like, can you just, I don't know what you're doing here. And they're like, well, we could replace it with something else or whatever. And they gave him kind of like a big tiff, right? And now these people are like, it wasn't about the pork belly. It was about the like, hey man, like maybe you made a mistake. Just help us out, make it a great experience. Yeah. That to me, like, is the same thing. It's like Sushi Oda started with this guy, this crafty, this good intentions, but along the lines, like little changes, right? Maybe take the real menus away and do the QR code. Get the plastic knives instead of the real knives. Like, what? It's happening everywhere.
Well, that point, I read this guy. His name is Ted Goya. He's like a Stanford jazz former professor, and he's got a great Substack. But he talks about just social stuff generally. And I tweeted this yesterday, but he said the Wall Street Journal noticed it a few weeks ago. People are buying secondhand gifts. The sheer numbers are staggering. In a recent survey, 82% of consumers said they'd more likely to purchase pre-owned items for holiday presents than new items. And he basically is saying that like all the stuff we create now, because like the only thing that matters is scale, that everything's so diluted that people are now going back and trying to buy like stuff that was, created in the 90s, they want all the legacy stuff, because all the things we buy it's shit. It's from Temu, and it's like poorly constructed. It's not made to last. So people are now going back and buying secondhand things because they're actually made better. But it's such a product of basically finance, right? Like finance only wants the outliers. They only want you to grow to be like a $10 billion company. They don't really want you to consistently grow for 20 years and be just a really great company over a generation. They want like, boom, let's go so I can raise my next fund. And therein lies, everything. The way our financial system has been set up is just kind of gross. And I think you need, as an individual investor, have to have longer term outlooks and concentrate on things that you actually want to invest in the world you live in. Like, I never, believe it or not, I've never actually like existentially owned Facebook or Meta because I hate that fucking company. I think it's actually a net negative on humanity. Maybe I'm wrong and he solves it, but like, I think it's caused way more problems. But the fact that like,
but he fights MMA now, Tyler. He's cool now.
Well, yeah, I know that's the whole thing. You can see like the whole pivot. It's like clearly he knows what's going to be cool in a couple of years, and he's trying to pivot to be cool. It's such a annoying. Anyway, all the other companies I wouldn't put $1 in because, but now our 401k system is so ingratiated into it where you have to invest in Meta now, and I don't like that because it reinforces things that aren't necessarily good. Anyway, that's more personal preference.
Well, that's interesting. The gift thing, like, yeah, I could see that. I suppose it's like track homes were popular for a while, and now people are like, I want that old leather couch that was custom made back in the 70s. I don't want one of these like what do you call it, restoration hardware, things.
Yeah, big box, like totally new, these box homes, the track homes that you talk about, they're all over here in Austin now. They all look the same, and it's like, I don't know.
Well, that's what I was thinking. Like, I wonder if like very rare Veblen good style like custom one-of-one watches will have like a historic run.
Yes.
Where like a tinkerer guy, like not like a Rolex pounding out millions of watches and saying it's all about brand. I'm talking about like that. Only 100 pieces ever made. The guy's dead. You know.
Yeah. I totally agree with that. My old boss, he owned this book of Ayn Rand, Atlas Shrugged, that first edition. She wrote like in it.
Yeah.
And he's like, out of all the investments I made, like, this was by far the best one ever. And like,
that's sick.
It's like priceless because it's that type of stuff will never go out of style, and it's real and genuine. And I think that's what our next generation really wants, is like real and genuine stuff. It's not based off yield. Like, look at all these track homes. It's like, how much yield can I generate from it? And if anyone says like, oh, what's the yield on that? Like, the problem with high volatility futuristic stuff is because you can't just package it up and sell it to a pension, right? You have to believe in it, right? And so like space is a great example. Is you can't really you have to be out on the risk spectrum to invest in space. And I'm not saying like throw all your money in space by any means, but like psychologically, it's so out there that you can't create, oh, here's a mortgage-backed security of space bonds. Like, you can't do that. But that's where I think you're going to have to be to stay ahead of this like monetary dilution, is stuff like that.
This is a cool, like, it makes me think of like a cool setup for a fund where it's like only like space and the absolute like future speculative growth stuff, but you balance it with the rare one-of-one Veblen goods, like Fabergé eggs from back in the day. You're only, some swords. Yeah, like something from like the King Tut or whatever fucking thing. And this brings me to a funny thing. I came up with this idea. I'll just get your quick take on it before we move on. But my buddy went to France and he sends me a link. Because he's like in the countryside of France or whatever, doing his thing. And he's like, dude, let's buy a castle. There's one for sale for like $1 million over here. And I like, was like, haha, it's funny. Right? Like a month ago, I was like, I should start a castle fund. I was like, think about it. We go find like 100 castles in like Portugal, France, Rome, like all these ones that have been left for dead that aren't like, not like the Colosseum, like these ones that are out there that are untouched, like still have the moats, still have like the whatever, and create a big fund and then just tell that story to some really rich Chinese people and be like, don't you want to own the last remaining parts of history before we fuck it all up entirely? And then flip all the castles to a rich guy. That's what
you know what? I think that's brilliant. And honestly, so this was to that point, I met this guy playing basketball in Austin, and he started a city that was just based around quilting. And it's like, it's the largest quilt manufacturer in America. I think it's in like Missouri or something. And super nice guy. And he's like, we've created a whole tourist attraction with this city. And like, we do quilting better than anyone else in the country. That's what we do. And he was like, but that's really how America was made, right? Like each town specialized in something. So when you went to a town, they would produce something that was really original. So like, I'm from Jersey, right? Like, we produced a lot of sarcastic losers, and you're from California. You're like great.
No, I'm from Syracuse, New York. We had salt.
Okay, you're right next there.
Yeah, we had salt.
So, but like, yeah, you used to have like little pockets of. Now there's no difference between like Pittsburgh and fucking Buffalo.
All looks the same.
It's all the same.
Chipotle everywhere. Chipotle.
They're all on, everyone's on Instagram and thinks the same way and looks at all these dumb celebrities, and no one thinks originally anymore because of the internet. But this guy was like, he just created he was a specialist, like you said, the expert, the tinkerer of this thing. And his mom was the real, I think she started the quilt company, and then now it's like the largest quilt company. And then women go and they take their bachelorette parties to this town in Missouri and like essentially like do like bachelorette parties and quilt and do all this stuff. But I think that's the next model of stuff, to your point on like castles, is like real original things. Not diluted experience. And like, here's another good one. My buddy the other day, he goes to the Warriors game, in Golden State Warriors game, and they're playing the Oklahoma City Thunder, who's #1 in the NBA. I haven't watched an NBA game for ages, but he goes there. It's supposed to be Steph Curry, Jimmy Butler, and Draymond Green playing, Shai Gilgeous-Alexander, all the Oklahoma City, and he's like, he's basically like, they sat Jimmy Butler, Steph Curry, and here's my son, 7 years old, and like he wants to see a game, and he got the tickets from one of the GMs on the Thunder that he knew, but he basically was like, my son, if I had paid, I would have paid $2,000 for those tickets, and my son wouldn't have seen. And like, that's the dilution of all this stuff. It's just like
so perfect
now. And then you go and he's like, everyone's on their phone. They're not even looking at the game. They're not cheering. It's just everything has been, the culture has just been like rinsed and rinsed. No real people anymore. Because everyone can't say, this is the funny thing is like, I find this in media and a lot of podcasts is like, it's rare to get someone like Carson Block. Like Carson lets me talk. Like I can say whatever the hell I want, and you can say whatever the hell you want. But most guys can't say what they want because they represent this giant centralized organization that has a lot of liability. So it's rare to actually like those incentives. If you can retain your right to actually speak, that is where I want to bet. Right. Like that's where I want to bet my money, because like that means that you can say things that other people won't, and your access is way better than anybody else. And you're not hidden behind this wall of lawyers. And therein lies a lot of alpha. Like access is actually like a big thing too. Regulation and access fund. But
well, yeah, I mean, going back to the whole idea that these private companies are getting a lot of, you want to be able to participate in that, and the only time you end up getting to is when they go public. It's like finding out how to have a voice, how to get access or whatever is its own investment in itself.
Yeah, totally. So it's gonna be interesting how it shakes out, though, man. All
right, so for the younger people, like, all right, what I'm gathering is like, we need to figure out, like, it does sound like the market is starting to fight back in a weird, I heard somebody say like the other day that they feel like markets have a way, regardless of if you think they're free or not, to kind of like start to fight back at the margin to try and equilibrate whatever itself. And I wonder if we're starting to see like the fight back towards like human connection, old things, like old vibes, whatever. We're clearly starting to see religion, right? Like we're starting to see that. So, but then when we talked about, you need to have maybe a contrarian take on, like, the whole world is forcing short termism down your throat. And the one big contrarian bet you could make is, one, long-term thinking, which is super hard because all around you is just success in 10 minutes.
Yeah.
And then betting on yourself where you can keep your speech rather than buying into some diluted thing where you're just part of a giant wheel cog. So how does somebody that's young, like, start thinking that way and believing that way when nobody else around them is like that?
Yeah. That's the hard part, because you're institutionalized coming out of college to just be a herd mentality. And like, part of why I'm the way I am is just my dad was like in education. He was a principal. So like natural rebellious against anything your dad does. Like, I love my pops, but like, and when I got to college, I was like, what the hell am I paying for? Like, I can do this on my own, we're paying, whatever. And anyway, so what I would say is, like, investigative journalism, I think, is going to be this Nick Shirley thing to bring up. There's so many misaligned incentives. Well, you think about like a bureaucracy. I don't know if you've ever worked at like a giant corporation. Unfortunately, I have. And there's lots of good things. It's safe. You're not going to fall through the cracks, but you're never going to be able to excel because there's so much red tape. And it's not really meritocratic anymore because there's so many layers of HR and nonsense if it's a big company. That's largely America now, right? Dominated by just oligopoly companies. But internally, there's so much messed up stuff that happens there that if you're a whistleblower, your incentive to like find problems at these companies is astronomical now. The return to be a lone person that finds out things about all these people doing bad things is way higher than your wage going up 3% a year or whatever the hell it is. So I think that's going to be a boom, because also the access to audience is zero. If you actually find a big enough problem, that guy went overnight. Now he's like, he's probably got his own, news platform. Not saying that not everyone can do that, but those are the types of like risk versus reward things that are massively in your favor as an individual now that never used to be that way. And I think it's getting even more so with government spending and all entitlements and boomers aging. There's lots of nefarious things going on.
Yeah.
I think that's going to be a boom industry.
Yeah, it just makes me go back to thinking about this idea that myself and Global Flows talk about all the time, is how do we further bet on ourselves and rely less and less on other people? Because you're given the tools these days to bet more and more on yourself, right? Like, I'm doing this YouTube thing. Something's resonating with people and mindset and stuff in markets. And okay, so then I start thinking, like, how could I make this work? How could I help people one-on-one? Like, I'm not going to be able to teach advanced traders any new tricks, but for somebody just trying to explore speculative stuff and like needs to save 6 months to a year, I could help you with that. You know what I mean? And then I could turn on the ad thing on YouTube and make a little money here. All of a sudden, you start stacking on some things, and all of a sudden you can start betting on yourself and creating something out of nothing. The opposite side of that is life's getting more and more expensive. So like, how much runway do you have to be able to do that? And it's like, oh, you could go to college and take on debt and then try to get a job that AI is going to already take over in 3 years. It's like, there's all sorts of like decisions that have to be made and pivots that have to be made here. And we're at that point.
I think it's, I've had 10 different jobs, and what I actually like pride myself on it because it's most people.
Sounds like you're the problem, Tyler.
Well, I've left on pretty good terms on every single one of them, but you have to be malleable in this environment because things change so fast. Like when I got into the business, into trading, they had these football fields long of traders. Now there's like, I think there's like 10 market makers at Goldman Sachs now. They rented or they built these entire buildings in Stamford, Connecticut to have like football field long, sell side traders. And now they're all gone, right? There's like there's not many traders anymore on a institutional basis. But anyway, I guess where I was going with that was you have to adapt, and you have to always be talking to your quirkiest friend. You'll find little bull markets here and there. I think that's a great piece of advice, is like when something interests you, like I look at like this SMR type thing for nuclear. I have 3 kids, so I'm a little bit more tied to like my job.
Is that like is that the small nuclear reactors or whatever?
Yeah, like those modular reactors. I would go try to find a job at a company like that. I look at all the capital raises that were like Series Bs and be like, okay, that's a cool industry. That sounds fun. Like you're way better. Get a foot in the door, send an email, knock on a door, and go to a cool industry like that that's growing, rather than, you know, something that's dying. And
yeah,
you're going to be staying ahead of the inflation if you're in industries like that, rather than, you know, some dusty industry like finance.
Yeah. And I guess being creative, yeah, it is a dusty industry. Like being creative and like it's kind of cool now to stand out rather than conform. Like online, at least you see, actually, it's kind of weird. It's both, right? You want to conform, but like it's like, you know who Machine Gun Kelly is?
Yeah.
Right. Like that dude just stands out, and he kind of started this whole skinny boy, bad boy rapper thing from Cleveland. Like,
yeah, you got a little Machine Gun Kelly in you.
Oh yeah, I'll take it. I'll take that. But like, it's cool to stand out, and if you could like cross that chasm to take chances like that and stuff, like I think there's so many ways to have it pay off. But like, I go around my neighborhoods in San Diego, and it's still so entrenched, this idea that like you still got to do the college thing, you still should go to the safe thing. It's we aren't like those like I almost think we need to get back to like the renegade thinking. And I feel like the super young kids are kind of like, fuck it, you know, they're kind of getting there, and it's started to become that. Like Nick Shirley's a great example.
Yeah, you know what's interesting to me is the prescribed plan was you do really well in school, you go to like a college, you know, you go to an Ivy League college, like that whole idea of success, and then you get a job somewhere from that Ivy League college. I think it's now a stain, and kids want to go to SEC schools, and you know the South has a lot more cohesion. I think like I'm in Austin, right? I went to Boston College. I'm going to knock Boston College for a second, but like loved Boston College, great school, but they have no, like UT is a school that like you become part of the community and people support. There's a culture there that's just way different than any Northeastern school. Like you could go to a basketball game at UT on a normal Tuesday night, it's packed. You go to a basketball game at BC, no one's even in the stands. And like at Northeastern, you know, and that's a top 25 school academically. And there's no, people want to be part of a community, and the South still has that. And so there's a lot of these, like, I don't know, it's a movement into the lower, it's also a lower cost of capital thing where there's more space in a lot of these SEC schools to build out. There's, you know, you can build housing without a lot of the blue state regulation stuff. They actually you're getting an influx of corporations that want to work with these colleges. Like there's companies that are moving in as like Texas A&M's, you know, filler to a corporation now. Like they want to send kids to these companies that are going to be in growth industries. The Northeastern schools aren't doing that at all. They think they're still academically pompous, and they think they have the moral high ground, including the California schools too. I'd throw those in with that as well. I don't know where you went, but like
Clemson.
Dude, Clemson, they're perfect examples. Like I think that's like a booming school now.
It's a massive school.
Yeah, and it's engineering, right?
Engineering, and then like farm stuff.
Yeah. So like that, like there's a wave into those types of schools that are, I think is another huge, you know, macro tide that is changing. And not only that, but they're also more right leaning, you know, and that I think when you tell a boomer that's like in the Northeast or California boomer, like that's the natural tide of Zoomers and younger kids. They think you're crazy, but it's the counterculture. They're always fighting against the last battle, you know?
Yeah, until you get like NIL and stuff like this, you're starting to see like
Yeah.
I don't know, was it UT where like there's something like a fund is had bought into the brand of the sports. Was it
Oh,
UT? Oh
private.
no, it was Utah, I think. This was like
Yeah.
I think it
It was
was
a
Utah.
private equity firm. Yeah. Yeah. Utah.
Yeah, and I was like, oh, they're coming into colleges even like they're coming in to eat away at the like the potential there too. And
Yeah.
like I know what you're saying because Clemson was the same way. Now I didn't love it because I'm from the Northeast and I didn't feel it's like somebody going to Tennessee that moved from Seattle. It's like you're not going to feel right, and they're going to know where you're from. So,
Totally. Totally.
but I know what you're saying. It wasn't so much about accomplishment and stuff. Like out in California, it's like what school do you go to, and how accomplished are you to get to what spot. It's
Yeah.
whereas like at UT or Clemson or whatever, it's like how do you just make friends, bro? Like,
Yeah.
and how do you enjoy this time for 4 years? You
Mm-hmm.
know, and yeah,
There's,
hopefully full circle in a way we get back to that while also kind of figuring out how these younger people can like stay at the forefront of the markets because it's just hard and they don't have money.
yeah.
So
Yeah. I think that at the end, they're just going to start handing money out or massive tax benefits for children, or there's all sorts of acronyms they'll come up with because the political angst is I don't know if you watched any of this New York Mayor Mamdani stuff, but like the housing, I think the head of housing for New York, they just
I saw that the white people thing. Yeah.
the white people, but like they said property will now be a collectivist good and not a individual good. And you're like, if I don't even think she could do anything because that's the inalienable right you have as a federal U.S. citizen. But at the same time, they can make it hard enough. And I think that when you get the pie shrinking, those natural impulses will come for the leftist, the left states and the blue states. And they're also the ones that promise the most to the boomer pensions. And I think that then lies the issue is like, I talk about this a lot too, but Texas has almost a $30 billion surplus. So they don't have to suck anything from anybody. In fact, companies are moving here, and this California tax that they're doing is, I think the All In podcast guys are all moving to Austin now. So that natural arbitrage is just going to keep happening, and you're just going to have decaying infrastructure. So I would say if you're a young kid, go to a Southern school, go find a place where your cost of capital, your personal cost of capital is low so that you can take some risks. You never want to, if you're stuck in a high cost, apartment, then you're screwed. You're screwing your future. You got to live really cheaply and take as many risks, swing to the moon for your first 10 years of employment and learn a lot of things. And then you'll, choose growth industries, I would say. But I don't, the prescribed plan, especially if you're in boomer industries like insurance and housing and all these low they're short vol proxies, meaning they're just manufacturing yield. If you're in a manufacturing yield thing, those are toast. That's going to be a generation of bleeding. So that's probably where I'll
and and if you take on some risk, you will get used to risk, right?
Yeah.
Like if there's one thing I tell people, like time in the seat as a trader is like the wisdom of traders, man. Like there's a lot of stuff that you've experienced. If you've lasted in the industry for 6, 7, 8 years, the shit you see, the vol you've taken internally and dealt with and all that. If you go to these places, keep a low cost of living, take a bunch of risks, try to think long term, do the things you like to do because you'll have conviction to keep doing them long term is like and inhale the risk. Just inhale it like Kirby. Just like
although I would say take really good swings at shots that you hit. Like one of the I played basketball in college for this guy named Al Skinner, and he was this old school dude, and he'd be like, he'd tell me, Tyler, you're not going to hit that shot with someone who's 6'8" in your face. He goes, you're going to hit the wide open elbow jumper. You hit your high percentage shots. So he's like, take risk, but take the right risks. Don't swing for the fucking fences. And so I don't know, that kind of instilled in me is like, am I going to hit this pitch? Like, do I have a chance at hitting this pitch? Don't just like go out there and just swing at everything. And I think that's the big thing. When I was younger, at least trading stocks was like, that sounds like a good idea. I'll buy that.
Yeah.
And then you're like, you have to know when you have an edge in something, or you are the expert in something and someone's not. Like, what's your edge when you're buying or selling something? I think it's the other.
Yeah.
Being a trader.
This reminds me of Neville saying, take some time for your big decisions, like where you live, who you get into a relationship with, and what you do for work. Like, you can take 6 months to think about all those things. You don't need to rush into anything. And then when it feels right, swing for the fences, right? Makes a lot more sense.
And that's what Druck does. Stan Druckenmiller is like, watch your eggs closely, but bet concentrated positions. And I think that's where, now that I'm 42, I'm kind of trying to do that more consistently. It's like, I found a shop that does that. I've found, I do that myself now on things. And I found that my shooting percentage is way higher than it used to be consistently. And that allows me to stay ahead of the inflation of all these things. So,
all right. Thanks, Tyler. Give us a ticker. We need a short, give us a short. What do we buy? What do we short?
This is the one thing I can't say by compliance.
Yeah. Do it in sign language.
But sector. I did make a call on, I said, Bitcoin was something that at the end of the year, I was like,
you don't have to convince that. I've been riding that roller coaster, so let's go.
Let's let that puppy keep running.
All right. Well, thanks, guys. If you don't follow Tyler, go give him a follow on X. He's also on Blockworks doing some stuff and out there killing the game. So thanks, man. I appreciate it.
Yeah. Thanks, James. Catch you soon, man.
Later, guys.
Later.